On today's episode of the Cryptoverse. While everybody panics about the price of Bitcoin, developers of the Lightning Network release an alpha version that is ready for testing. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. Today is the 16th of January 2017, so let us begin with the market roundup. So we now turn to coinmarketcap.com to look at the biggest winner and the biggest loser of the day. Let's start with the biggest loser of the day. Down in 19th position as the most capitalized coin, we have Lisk. A Lisk token is now worth 15.5 cents, having dropped 3.74% in the last 24 hours. I quite like the idea of Lisk. It's sort of like Ethereum in the sense that you can build decentralized applications. The difference is with Lisk, there are two main differences with Lisk. One, you build your apps using JavaScript. Why is that important? Well, because you can use all the existing knowledge you have if you're a JavaScript developer. It's very widely supported and so on. And also it says here that each Lisk app runs on its own chain, like a side chain, which protects the main Lisk chain itself. I find that fascinating. And those two things for me are huge differentiating factors that make Lisk a very, very interesting project indeed. Anyway, the biggest winner of the day is Steem. You may or may not be familiar with Steem. But Steem is at 14.2% today, giving the Steem token a value of 15.8 cents each. Now, Steem describes itself as a social media blockchain, and steemit.com is sort of the first application that was built on the Steem blockchain. However, all sorts of social networks could be built on the Steem blockchain, and they all share the same underlying value layer, which would be the Steem blockchain. For example, look out for busy.org launching very soon in alpha version, I think. I think it's next month, February. Busy are aiming to launch their alpha version. So this is going to be, if you've used Steemit, that's very much like Reddit on the blockchain. Busy is going to be much more like Facebook on the blockchain. So as you look at their screenshots here, you can see it's much more Facebook-like than Reddit-like. So it's not strictly fair to compare steemit.com to Facebook because it doesn't exactly work like that. You've got minds.com, that's an alternative, not on a blockchain, but that's very Facebook-like, and then Facebook itself, and then busy.org, and then maybe Scenario also fits into that category of a full-blown social network that's very Facebook-like. So there we go. Steem is up today as the biggest winner. So now let's go look at the Bitcoin price chart and see what that is doing. So the Bitcoin price is courtesy of bitcoinwisdom.com, and we're looking at the Bitstamp price here. Well, what can I say today? Right now, Bitcoin is trading at $825.95. The last 3 days, including today, the volatility has returned to what I would call normal. And normal was what was happening back here at the beginning of the year, or mid-December, when day-to-day Bitcoin was only fluctuating by less than 1% every day. So I would prefer that, to be honest. I'd prefer maybe, a 0.2% gain one day and then gradually creep it up over time. Not these great big 10 or, 12% swings. But what can I say about the price today? The volume is returned to normal, whatever normal is, but there's a lot less now than these crazy swings. People seem to have calmed down now. The only other thing I would say is that, I was talking about my moving averages here, right? So I've got my 200-day moving average in the orange, 50-day moving average in the blue. One thing that I didn't point out the other day was the price at the moment is in what I would call no man's land. This is in between the moving averages. So one of the criteria that I use to decide or determine or flag Bitcoin as in an uptrend or a downtrend to signal whether, it's a buy or a sell signal, I personally go with, one of the things I go with is whether the price is above or below both of my moving averages. So that's why here, this here, which was the last time I bought some Bitcoin was here, which was on the 8th of January after the first two big crash days. So I bought it a bit high because then there was a third big crash day on the 11th, but I'm not too worried about that because it was correct for me to buy at that point because at that point, the price was still trading above both moving averages. If I'd have bought on this crash day, which was 11th of January, if I'd have bought it down here, well, that would have violated one of my rules because it's $780, that's in between the moving averages. And based on my own trading criteria, that no longer qualifies as an uptrend strictly, right? So I would never trade or buy or sell when the price is in no man's land, which is in between the moving averages. So similarly, if the price is below both moving averages, well, to me, that would be confirmation of a downtrend. And then the only thing you should really be doing is selling, right? And this is assuming you use the same trading rules as I do. I'm just sharing, the way I see these things. So at the moment, we are still in no man's land. We haven't broken back up above the 50-day moving average. So that would be the next time I would look in to buy, because that would then confirm that I'm getting it at a price that is most likely going to continue to increase. So that's the benefit of buying in an uptrend, is you are riding the wave up, right? Which is why, even though you could call it wrong to buy on the 9th or the 8th that I bought, however much I bought, you could say that was wrong because 2 days or 3 days later it crashed. But no, that was correct because everything, based on my analysis on that day, I was fully expecting that crash wave to then begin rising again. So that's the thing. You can't guarantee these things. You can only do your analysis, do your risk management, never risk more than you can afford to lose, and then put the trade on, and then face the outcome. Just make sure that if you lose, you don't lose a lot. So I was going to talk about stop losses then, but that's going to consume the whole episode if I go into that. So, and that I'm going to make that course about trading. So stay tuned for that. So the Lightning Network then. I'm so pleased that they called it that because so often I see tech companies name products based on the tech rather than the benefit. So when you think Lightning, you think of words like, fast or flash. So more power to them for that, right? So I'm quite a big fan of the Lightning Network as a concept, and I'm very eager to follow its development. So this article says, in a recent blog by developers of the Lightning Network, they've recently announced an alpha version of the Lightning Network that is said to be a milestone that enables the platform to be publicly tested by developers. So this is one of those you don't know what you don't know situations. If you ever find yourself questioning this whole software development process, where apps go into like an alpha version, then a beta version, and then they go to a full release and all this lot, then this is a good time to touch on this. To my mind, as a general rule, the less testing that a software developer does, the more arrogant and egotistical they are likely to be. So putting out a test version of some software is literally a statement that goes something like this. Okay, we've mapped out the software architecture, we've written the code, we've run it ourselves, and it's working the way we want it as far as we can see. However, we're pretty sure that there are many things we haven't thought of, so can everyone test it for us and help us figure out where we've gone wrong? So that's the definition of humility. And I'm going to come back to this in a minute as we continue through this article. So under this heading that says the Lightning Network is now available for testing, actually has a Bitcoin Pikachu image embedded in it. It says, the codebase is now available via the team's GitHub repo. This includes opening and closing channels, channel states, and onion encrypted payments amongst the protocol's features. So, I was struggling with a metaphor for the Lightning Network, but the best one I can think of is like a subway car. say a payment channel is kind of like when you are between stops. You would be the transaction, and the train car would be the data packet. And then when the doors close, you're locked in until you reach the next stop, right? This is kind of how the Lightning Network works. Actually, sometimes the overground trains don't stop at every station. Sometimes they just race through a station that they're not supposed to stop at. So that's even closer to how the Lightning Network works, because your transaction on the Lightning Network may pass through several nodes, because several nodes in between you and the destination actually relay the transaction on your behalf until it actually reaches its final destination, right? But at no time can any of those stations, or neither are they authorized to, take a peek at what's on the train because it's encrypted. And better than that, each station it passes through, they can even earn a small fee, meaning anyone running a Bitcoin node on the Lightning Network could technically earn fees from Lightning. So just simply by being in between a transaction that someone else wants to send. So person A wants to send to person C, and they do not have a direct Lightning channel from A to C, whereas you might have a connection to both of those people, right? So that transaction can then be relayed via you, but it's encrypted, of course, and you'll say, okay, fine, I'll relay the transaction for you, and you may charge a fee for that, or you may not. But it brings sort of the opportunity that mining used to present for the average person to perhaps earn some fees from Bitcoin transactions, which, of course, mining, is fairly difficult to earn any money from that for the average user now. But maybe Lightning presents that opportunity, even if it's only in small amounts. The proviso obviously is that you have to actually have some Bitcoin in that node. I'm not going to go into the nitty-gritty of how Lightning works, but you do have to sort of have some collateral in order to relay that transaction. And that just makes sure that if everyone in the chain has collateral, they make sure that everyone in the chain is guaranteed to get paid if they relay the money to someone else, right? So moving on to this yellow bit, there's a quote here. It says, quote, "The entirety of the LND codebase has been built from scratch using Go, a new systems programming language that makes it easy to build simple, reliable, and efficient software." And this is coming from the Lightning Network developers. They say, "We chose Go due to its first-class language-level support for concurrency, expansive standard library, memory safety, and simple language design. The last point holds significance as we've developed the codebase for LND with readability in mind above all." Close quote. Now, this was music to my ears for two specific reasons. One is that their choice of programming language being Go, they say here, it's a systems programming language. To me, that's very important because we're increasingly dealing with ever more connected and networked software. So every connection is basically a relationship between those two apps or two elements. So building the software using systems theory, not just to plan the software conceptually, but to be able to accurately reflect the plan in code, means nothing gets sort of lost in translation when you go through that process of designing the software and then translating that into the code you actually write. So the second thing here is that they say that readability of the code was an important consideration. And that immediately took me back to the DAO fiasco, where the Slockit developers wrote the code, but they didn't see all the ways in which it could run. Again, talking about systems theory, where you look at things based on the relationships between each of the elements, the DAO code did actually run fine, right? It worked, but there was a relationship between two elements that the attacker saw and used, a relationship which the original developer obviously didn't see. Now, there could be many reasons for that, but an obvious one would be the complexity of the programming language itself that they were dealing with on Ethereum. And you might be able to write the code, but if you don't see the wider context when you read it back, that's quite dangerous, especially if other developers you are working with can read the code and they think they know what it means or how it's going to run, but actually don't, right? So far, I'm actually liking these guys who are developing the Lightning Network. So let's skip ahead here to this section that's under the heading Lightning's relationship with segregated witness. The only bit I've highlighted here says that the latest release of Lightning is meant for developer experimentation and currently supports programming languages such as C++, Java, Python, Go, and more. Right, so this is where external systems will connect to the Lightning Network. And the best way I can think to describe this, or how this works, is where you're in a restaurant, say. You have this menu of things that you can ask for, but you aren't allowed to actually walk into the kitchen and make it yourself. Right? You ask the waiter for what you want, and they go make it happen behind the scenes. So the menu in that context would be the opcodes, or the commands that you can make of the Lightning Network, and then the kitchen would be the Lightning Network itself. So anyone can use the services of the Lightning Network, but you can never enter the network itself. The closest you can get is to stand on the very edge, where you then ask the network what you want it to do for you. And you can only ask it to do what's on the menu, just like Bitcoin, since they both share the same scripting language. Then it's got a part here about end-to-end encryption and micropayments. It says the blog post states the protocol uses a method called hash time locked contracts, or HTLC, to deploy private micropayments. The developers detail with this feature, privacy is the default as it should be. Now this is great because it gives you the option of doing a regular Bitcoin transaction and have it publicly broadcast. Or you might choose to use Lightning to do it privately, which would be like meeting with someone in private and handing over the cash. No one would know that happened, or who was sending, or necessarily who was receiving it. So to a certain degree, this is going to help Bitcoin catch up with a lot of altcoins on the privacy front. You can probably tell from the positive way that I'm framing the Lightning Network in this episode that I am very excited about it. But let me know what you think about Lightning in the comments below. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.